Bum, bum, bum. Bum, bum, bum. Get ready for games. Family, hold up. Go ahead. Don't even play with him. Kill that wind effect. God. Yo. Come on in. Come on in. Come on in. Y'all know what time it is. All right, we done. All right, let's get down to it. People, welcome back. Much love, fam. We coming in on a beautiful Sunday. Hope everybody's weekend was good. We right back into the thing that we love, which is investing. I had Rose Cup people in the comments. I don't know what they thought this was, but this ain't that. But people, we have if you thought last week was volatile, this week is going to get even more in depth as far as the volatility. We got some plays to go over, including Greg Haywood. Haywood, appreciate your recommendation. Like I said, I've had my eyes on it, but I think it is time that we do take a look, glance through that, and something that we're keeping our eyes on, which is the PLTR stock. We talked about SoFi in the last video, but we're going to give a little rundown of what the expectations are for this upcoming week. Get ready. Like I said, it's about to get zesty. And y'all know zesty, don't miss. When it's zesty, it gets zesty. It gets zesty. But let's start off here. We got a what is it? Is it the claiming countdown? Or is that what Liz's last name is? But we got our favorite orange-haired cougar here giving us a rundown. Got a little interview coming in. Like I said, we have the Fed rate Fed meeting that's coming up here soon. People expecting a pause. In all honesty, I ain't heard Jay Powell say anything about this. I don't know why media is saying it's alluding to a pause. If it is a pause, that's going to send stocks flying. But I'm not expecting a pause. He has verbatim said that as long as inflation is still up, he's going to have to do interest rates. Everybody's hoping for a pause, but I'm not about to be set up here and get shocked, which is why I'm saying some of these plays we're keeping on our radar to get ready for if there is a hike. But like I said, I don't know if a hike is even going to affect some of these AI stocks. AI is snatching. People talking about AI, jumping AI, that's the maneuver. They trying to get their paper, trying to get their cheddar bag up. Hold on a second there. Make sure everything rolling on my camera. Yep. Yeah, buddy. Liz, let's get down to it, baby.
Let's bring in the floor show UBS Managing Director and Senior Portfolio Manager Jason Katz and the Lonsky Group President John Lonsky. Jason, do we sit here and watch kind of mealy-mouthed trading, straddling the flat line here and there until the Federal Reserve's big announcement next Wednesday? Do we sit here and watch kind of mealy-mouthed trading, straddling the flat line here and there until the Federal Reserve's big announcement next Wednesday?
Basically, we flew dangerously close to the sun. We avoided getting incinerated. We had a jobs number that had a little bit for everybody. Now we're in this vacuum with respect to earnings and economic numbers. So where is the market going to really trade? But I do think there's a growing consensus that this hard landing may not be a foregone conclusion. And as a result, investors are waiting idly, but staying invested.
I mean, here we are, John. It's June, and this much ballyhooed and expected recession not yet here, although some would argue that they're feeling certain pockets of it. But where do you see the opportunity, in a recession, especially when you see the volatility?
Guys, and by the way, definition of recession, guys, a recession doesn't mean everything's blown to smithereens. A recession literally means that you have less earnings than the year before. We're in a recession, so I don't know why we're trying to, oh no, we're not. Yeah, we're in a recession. Now, how big and how bad the recession, the type of recession, that's what we're still announcing. But this thing where they're trying to act like we're in a recession, them eggs, go to the grocery store, recession. And the thing is, nobody's buying them up, so that's how we know it's a recession. You got the price up here, and ain't nobody, the amount people are spending is not going up. Hey, ride with it.
Looking so unbelievably passive at the moment.
Yeah, that's what scares me. The VIX is the lowest it's been since, I think, February of 2020, prior to COVID. I don't know if that's easy to justify. There's still a lot of question marks out there. We've had almost 2 years where the average wage has lagged behind the CPI. And by the way, just prior to that Fed meeting, I think that Tuesday,
this is a recession. They showing charts. This is called a recession.
May CPI, though I think it's going to be fairly good news this time
That's
around.
Consumer inflation.
But again, I'd still be cautious. I would be careful about becoming bullish, about increasing my exposure to risk. The VIX may be down, but there's another measure of risk. That's a high-yield bond spread, and that's still relatively high, especially when compared to its long-term relationship.
I don't agree.
I don't know if we can pull up a one-week HYG. That, of course, is the ETF that has high yield bonds in there, but it had a massive inflow just over the past week or so. What do you make of that? And what does it mean to a basic equity investor?
I think it means that people want to lock.
Look at all these stores, guys. Just like I said, nobody's buying. The price of things is going up, but they're not making more profit. This is called a recession. Look at these. This is why I say retail sector is just now getting spiked. I'm not going in any retail stocks except possibly Lululemon. Why? Because there's one thing that a recession can't beat, and that's a woman's need to buy things. They're good. They're going to be good, I believe.
In yields before they ultimately head
Lululemon
lower
going crazy
into what will likely
selling
be
the same
a mild recession.
yoga
But
pants
the
in different
operative word
colors.
is mild, because if it is mild,
You got
then
your
you're not going to see a lot of
Lululemon?
delinquencies and defaults. So
No,
people
Sarah,
are
get
looking
your head
to
back.
chase a little bit yield and lock it in before perhaps it heads a little bit lower.
Yeah, in line with what Jason's saying, I've looked at these default forecasts, and the expected default rate goes no higher than maybe 5.76% a year from now. In
I love that
previous
they're showing the
recessions,
bonds
that
down,
default
like,
rate would hit
but
double
still
digits.
talking about
so
how that might
maybe
be a
there's
good
some
idea.
truth in what you're saying, but still, I would be ready for a renewed widening of spreads that could offset whatever decline in yields you get in terms of treasuries.
When you compare, John, the NASDAQ with whatever you want to compare it with, there is quite a dichotomy. The NASDAQ has been such a decent outperformer. What metric are you looking at to balance it out?
Well, you know, you can look at the Russell 2000, and of course that's been lagging behind. You could
How
also
about the Dow? Look at this.
Yeah, other indices, the value line.
Oh, look at the Dow. Yeah. Hey, you gonna skip over this up 30% on the year? Oh, yeah. Hey, tech. With a little bit of tech, with a side bit of tech, and you can tech your tech. I mean, what are we talking about here? But they just won't say it. Oh, yeah. Hello? 26% compared to 1%, and 26% after we've just had a little bit down after they hit all-time highs. Hey, man, I'm not a brain scientist, but I mean, come on now.
Lagging behind the NASDAQ.
This is how I know that this is where you need to be, because you see how they just don't want to talk about their NASDAQ and tech sector. They loading it up.
You know, those high-tech stocks, you're going to find the overall market is not doing all that great.
People tune into the show and they say,
don't care.
Liz, make me money, or at least get people on who can make me money. Jason, make the money right now.
I mean, to John's point, the disparity between the Dow and the NASDAQ has never, ever been wider than it is year to
Put
date.
that back up. Dow is up 1% year to date.
Come on,
NASDAQ's up
John.
26%
I don't know what his name is.
year to
Or you
date.
look at the large cap growth index versus the value index. It's a 20% differential. So to answer your question, you want to go, you know, the quarterback is leading the receiver. You're a Bengals fan, right?
Browns.
Oh, I'm sorry. I got that wrong.
Forgive him.
Cincinnati, my bad. So where do you want to go? And I get a lot of pushback on this. If we're heading into recession, Jason, why
I mean, just look at the difference, guys. I just, like I said, everybody's got their own investing pattern, but I just know I'm a future person. The whole idea investing is that you're putting your money in early on the things of the future. I don't want to go into things that have already blown up and people already ran their money up off of, right? All this AI, this is no question that AI is here to stay. You got crypto here to stay. I mean, this is not a confusing thing to me. In a recession, innovation is what pioneers your money.
This is the most telegraphed recession that we're going to enter into in my 30-year career.
Really?
And so if we're talking about it, the market at large knows it. So you want to
Them
be in
banks
some
off
of
the
those
screen, man.
areas where you have that gross disparity in valuation.
Yeah, we should point out that Goldman Sachs has trimmed its recession forecast, John. But that said, where do you see danger zones, meaning things that look attractive right now? Is it technology, but are actually kind of a snake pit?
Well, you can look at NVIDIA that was up, tremendously over the past year, my goodness. And that perhaps is overvalued. There's perhaps stocks that are similar to NVIDIA in high-tech space, so I would be careful in that particular area.
Okay.
Looking
All right.
ahead, one thing you might want to consider is that we're not going to have...
Guys, notice, they just won't say... Hey, I'm in there. I'm in tech. I don't care. Every single time I come up in media, it wants to overshadow and, oh, yeah, be careful because it could be. Hey, ask him, hey, what do you see the longevity of AI? How about you ask that question? right? I mean, what are you talking about overvalue?
A sustained recovery for the economy. We're not going to have a sustained period of growth for corporate earnings unless we have lower interest rates. So
AI,
what you might
tech
want to do is you might want to focus on those stocks that could benefit from what might well be significantly lower interest rates a year from now. Fed's long-term forecast for Fed funds is not 5 3/8%. No, it's 2.5%. So keep that in the back of your mind when investing money.
Yeah, and Jason, you're saying industrials and energy.
Yeah, look, market cap weighted
Look at this
index
guy.
like the
Look,
S&P
this man,
is
hey,
actually where the
I'm not
danger
listening
lies.
to you. I
So
don't care. You just literally skipped over. Hey, now, listen now. Yeah, now all those companies are up hundreds of percent. But now listen, you might want to go to something that when interest rates do get lower, they'll be back up. When they do, no, how about I go for a high price and power company that when they're lower, they get better. And when it's bad, they are also better. I mean, that makes no sense. Tesla's got the cheapest car to buy right now during the highest interest rates. What do you think sort of happens when interest rates are lower? More sales. You know what I'm saying? High, they can raise the. I mean, come on now. Hey,
You want to look at areas that are
is.
much more economically sensitive, more value oriented, and I think AI is not necessarily the bubble of, you know, the tech wreck or the cannabis craze or any of those other phenomenons. I think that's as real as rain. But outside of that, just clamoring into those 7 names that have driven 90% of the market, that's not where you want to
Well,
be.
the sun is shining here. We got to run. Both of you, thank you so much. Two of the most successful guys on Wall Street, Jason Katz and John Lonsky. We appreciate it.
Thanks, Liz.
Thank you, Liz.
They've been saying this whole thing, but I want to question Liz, when they were saying this whole thing when Tesla was at $100. What's the explanation now? When Nvidia was at $150, what's the explanation now? Oh no, you don't want to. Wait a minute. So now I could have 4x'd, and you still telling me? He said, hey, tell me where to make money. Did y'all hear anything where they made a recommendation? All they did was just smash on tech while showing a screen of the difference of what they're recommending. Hey, you guys could have got you a whole 1% this year so far. Hey, listen, if you in your high yield loans, which is what bonds are, you could have got you a whole 1% so far this year. Oh yes, awesome. That's exactly what I want to do, is put all my money in to giving to y'all the loan so I can get 1% back. Yes. Woo! No, absolutely not. But guys, let's double tap in, guys. Let's get down to this. Like I said, it's about mimosa o'clock, so we're gonna get down this quickly, guys. As we spoke in the last video, my expectations for the upcoming week, I expect, and again, don't let this get your panties all knotted up and your nips perked. But just based off of my opinion, what I'm seeing with the charts, how we're coming in next week, I expect us to see some green. How much green, I don't know. Like I said, all this is irrelevant unless it's the MOAS up until that 29th court hearing. But like I said, they smothered us down obsessively the last 2 weeks. And like I said, that close going green and that close on Friday of ending green gave me an indicator, especially with these pops that we're getting over here. Right before close, shoots up, for what was that? $4.80, 85 cents, almost $4, not going up to almost a pop to $5. We've been trading around $4.50 for the last week and a half. Up in one move, we poof. All right, they blow all they can to bring it back down. Algo was try to smother it down early in the morning, just for it to shoot up again, close to close. Right, we come in pre-markets bubbling. Snatches out, they can't do anything, which is showing me exhausted power. With these algos, you can tell when they have to force through early, usually they were having to try to stop it at midday to try to steady it out to hold it middle. Where they're having to force those synthetic sell pressure at the early morning, that means they're trying to push it down because it would pop out in general. You're seeing out on the previous day, you're seeing out on the close. Coming through, they had to push down and they still close higher than what they pushed down. The next morning it opens up and then we're still closing higher in a barcoding pattern. And that was a close on Friday. I expect us to open up on Monday going green. Why? Short interest is increasing 22.62% is where we're sitting at as of Sunday, 6/11. 8.85 days to cover. That's irrelevant. It's probably 59 days to cover at this point with the true amount of how much is shorted. Like we mentioned, 100% of this volume is going to the dark pool. There's nothing that we're seeing in the lit market except what they're allowing through. And most of that is through synthetic pressure, things like that. But looking at our last short percentage dark pools at 51.4%. Like I mentioned, the closer we get to 50% short interest on the dark pool, the more you're going to go green. You get to 40%, you're going to go even more green. But what we do note is that there are currently 0 shares available to borrow right now, which is another indicator. Again, now we know they can hit that Harry Potter Leviosa and put some more stocks on there. But up until that point, I know as of right now, by how things are shaping up, we should have a green opening going into next week. But again, there's going to be a lot of volatility as we cruise close to that Fed rate hike or that Fed rate meeting. I say Fed rate hike because I believe there's a hike coming in. Double tapping in, like I said, Greg. We're going to tap in this, guys. Something that you might want to put in your charts. Palantir stock. They've got a lot of good news is coming out. The fundamentals are good. They're a little bit more overvalued what people say. But like I said, I don't look at overvalue. I look at what revenues are, what the ideas, what the news is, and what that could possibly bring, what that's going to away for a stock. This right here currently, with our arrest, we had the S tier, which would be like Tesla for me, NVIDIA, A tier, Apple. Yeah, I mean, Apple could be an S tier too, but I'm gonna put that as A plus tier, right? A plus tier, Apple. Then B tier is where I would have things like SoFi, right? Where SoFi is now offering, where was here? We'll go to that. Here it is. To clarify, if you're putting your savings into banks like Chase or Bank of America, you are not being rewarded or getting your, patronage. Chase interest rates give you only 0.3% of something ridiculous like that. I'm with them, but I don't put my money in savings. My savings account is called the stock market. SoFi gives a 4.20% example. So people are loading into SoFi because they're an online bank and they're giving a high return on investment or return on your money sitting on it in savings, right? So that's one that I'm liking. And the business fundamentals of SoFi have always been there, but it's going to be a slow go company. That's something I'll put at B. They can graduate to A, but something that you might want to put in your watch list. Like I said, the movement of SoFi has been somewhere like, it's a weird looking candle. Look at that. I mean, look at things that happened in the stock market. Okay, what the hell was that? Poof. Oh yeah, that didn't happen. But the movement of SoFi, we come down and you could have got, if I'm not mistaken, I think they've got a 1x that's occurred since last month. So they're at 450. Now they're at $8.81, going to $9 and climbing. Obviously, you see this chart. It's unmistakable. And like I said, I keep my eyes on it, but now they're coming with more fundamentals and they're offering more. This is something that I put in the B tier. I probably put this in like my gambling or momentum trade portfolio. It could be graduated to long-term. So like I said, I'm not knocking if you do put it on hold as a long-term stock. It's got the fundamentals to do it. But that's just like I said, long-term, I look at 5-10-year horizon, right? Coming back, though, over to Palantir, right? Palantir has now engaged in the AI. And like I said, when you take AI, you teeter my nips. You teeter my nips. Like Greg said, we're looking over, they had a business with Panasonic as far as their batteries. But now, Palantir actually has AI practicality that actually works. And what's going on so far with this is this. Now, let's hear. Obviously, we're going to read over this. U.S. markets research data, OpenAI's GPT-4, and notice, I don't know what this project, the AI market size, Palantir stock price from 2023 to 2030. People, they're expecting Palantir to hit $200+ by 2030, right? Assumptions, Palantir's gains 1 to 4% of the AI market share each year in trades of price per share ratio of 10, right? So basically what they're saying is, and this is what the high note is going up to 350 is what they're projecting, right? But here's something big and why there's something that's tickling people's fancy. Palantir awarded a colossal $463 million multi-year contract with the U.S. Special Operatives Command. The contract aims to integrate the infrastructure of LLMs into the military, a crucial venture as we delve into an era of data overload. Palantir's AI and tech is now being pulled into the U.S. Army. Mr. Krabs, Q, money. So like I said, now guys, this is where I say why I'm like tech is the place where I like to be at. This is innovation. I'm not looking to be over there fudded around by fuzzes. Oh yeah, come over to the banking sector. We need you to, yeah, you should go into high bond loans, right? That's what yields are. High bond loans. Yeah. Put your money here to America so you can loan. Why would I put my money if y'all need loans that bad? They're going up because y'all need money that bad. Oh hell no. I think I'll go over here, right? So like I said, guys, keep that on your radar. We're having expectations. A movement for Tesla, Nvidia. I expect that run to continue. They're cruising off, I would say Monday. If not blowing off, you're going to have a day where it's resting. But like I said, Thursday, Friday of last week, they were already stabilizing, holding off after those bullish blow-ups and pops, right? I expect that to continue next week, especially as media is pushing the pause narrative. Be careful about that. I still think a hike's coming. If a pause comes, hey, I'm be hitting that Irish dance. Hey, I'm the worst neighbor alive. Listen, upstairs neighbor of the year, that's me. But guys, much love to y'all. Keep your heads on the swivel. This is going to be an interesting week coming in. I love y'all boys. Y'all know what we're doing. Much love to, hey, what we call this? The Money Mafia. Hey, and to all of those that are new or coming in, guys, this ain't just an AMC channel. This is a retail saga channel. We're running up bags. We're learning new things. We're putting out plays. We're having conversations, period. Right? And if you don't have a valid opinion, this ain't just some emotional, hey, don't mention anything about politics. Because I had somebody who's like, you said if people should sell AMC. No, for what I said, if all your money is sitting in AMC to where you can't invest in the other place, you need to reallocate some of your funds, period. Right? That's a period. Point blank statement. You need to reallocate so you can catch on to some of these other games that are giving the same mo-ass moves. Oh, sniperly declared. Get up there. All right. But like I said, all I'm doing is giving recommendations. And this can never and will never be a you better type of thing, right? Everybody is the captain of their ship. We all just riding together with our cannons face forward because we fighting against the same type of thing. The same enemy, we got the same opposition. But at the end of the day, how you moving, how you trade is how you moving, how you trade. That's what everybody got caught up in, that trades thing where everybody, oh, you do this, you can't, you're not we're not doing that over here. Everybody has a good idea. The fact that you're investing and you're in the market right now alone already lets me know the type of individual you are. So you already got intellect. That's why we're in this room. That's why we're having these conversations. Period, guys. Much love. Y'all hold it down. I'm about to go mimosa it up in that thing. Maybe get a little about a tan on the back of my neck. Hopefully I don't catch any skin cancer. Y'all wish me the luck. Y'all boys know what's next, don't you? Yes, sir.